Hey everyone, this is Julie, J Auto Trading Strategies, and it is post FOMC decision day, quantitative tightening day, September 20th. We're going to take a look at the markets, a couple of the ones that I look at during these events, and see how they did. First, the market analyzer, you can see that the euro and yen were bearish. The 6E down $1,237, almost 82%. Likewise, gold and the yen were down. Gas came off, but that really wasn't the report related. To the upside, you had a rally in crude. Not quite time to roll over yet. Watching the volume on this still. Still on November. But here is the yen, and you can tell that a really nice sell-off immediately after the announcement, and then after Chair Yellen started talking, the market came back a little bit off its lows. Here it is on the Unirinkos. So you can see the market turned over and then came back to the average. And here is what it looks like to time those entries and let the software enter for you. And I'm so grateful to Anna Nesser's interview because it really did remind me, and Anthony Crudell, thank you very much for saying that you have to be patient and wait for the price, because if you try to get in too soon, you don't know if it's still moving the opposite direction and for how far. Just because there is a moving average there doesn't mean that you have to respond to it or pivot or anything. You have to wait for price to turn and then you enter. Ta-da! So otherwise, just wait, be patient. And then here is the euro. It's going to look like a mirror image, or more. Actually, it had a gap to fill off of its daily, and so that played into the euro, I think, a little bit today. Here is the uptrend. Give me a second for this chart to load. There it is. And here we go, similar move, big flush down, and it sort of went flat, kind of choppy. People were trying to send it back down, but it did end up evening out, flattening it out. So mirror image, wait for the software, get a bigger bar, don't trade a 1-2, and enter on the turn. This is the direction guide template if you're wondering what this is. And let's see what else. The gold. So we had mixed messages in that report release. Initially, kind of appeared to be a little bit hawkish, with the statement being that they're going to stay on target with their anticipated hike, one more hike this year, and then 3 next year. But there's 2 dissenters that came out on the Fed's board, the FOMC board, and they were in disagreement with that assessment. One guy didn't even think there would be any hikes next year at all. And I sort of don't blame him. If there's no inflation, there's nothing to hike into, right? And they're all going to be selling their QE to each other. I don't know how they're going to work that one out. So when everyone starts normalizing their balance sheets, it's like, are they now supposed to buy each other's stuff? How's that going to work? There's not going to be anybody there buying that stuff. I mean, just did y'all see the calendar? Feel like I'm Chicken Little on Monday this week. Right here, the TIC, see this 1.3B miss? They were expecting 42.3B. This is the net amount. This isn't the total amount that's traded, but the net after all the transactions open and close. Excuse me. So this is very worrisome. If they start unwinding their balance sheets, it's like, and they're all doing it at one time. How does that work? So that was gold. Let me show you the E-mini real quick. And healthcare is another risk this coming 2-week period. Let's not forget. Nobody likes Obamacare. There are a ton of things to fix with it. That's what everybody says. But people do not want you to take away their health care. And that's through no fault of their own. I mean, you don't want to lose your health care. So that's what's going to happen. Probably people will have not as much coverage. So that's a huge concern for me. I don't want to see that happen. But here we are. We had hardly anything. We just had a normal bounce and close on the high. So on the E-mini. Back up there. Just those were your trades. Nothing's changed. So that is that. Gold, E-mini. Let's look at the bond real quick. Because it flattened out like a pancake, like the yield is on the 10-year. See how flat? So here was the initial reaction, sell-off, and then bounce and rally. I mean, what is that? That's right back to where it started. Look. I mean, here we were at 1 o'clock, and look where we landed above it. So, flat, up and down. I don't know which way to trade the bonds, to tell you the truth. You know, just keep your eye on some macro event risk with Korea, and otherwise, the short-term direction should be lower as set by the Fed. It's anticipated rate hike in this year. So, and again, if you want to trade short, set it to short and wait for the market to roll over before entering. And that way you have a clean entry. All right, so this is Julie, Jeopardizing Trading Strategies. Hope you had a good day today, and going forward, just tread lightly. There's some things, some event risk on the table. There's healthcare. There is global macro. And then there's all these other banks going to be trying to unload their balance sheets all at the same time. It's like, somebody please explain to me how that's going to work. Okay, thank you so much.